Hello guys, welcome to another video. Today we are going to talk about troubled debt restructuring. A troubled debt restructuring is one in which the creditor allows the debtor certain concession to improve the likelihood of collection that would not be considered under normal circumstances. Concession might include items such as reduced interest rates. Maybe the creditors is going to reduce the interest rates, or maybe the creditor is going to extend the maturity dates, or maybe the creditor is going to reduce the face amount of the debt, or maybe the creditor is going to reduce the amount of accrued interest. The concession must be made in the light of the debtor's financial difficulty, and the objective of the creditor must be to maximize recovery of the investment. Troubled debt restructuring are often the result of legal proceeding or of the negotiation between parties. Sometimes, the debtors might not be able to pay the debt. So maybe in that scenario, there might be a certain legal proceedings as well. Okay, guys. So here we have a simple idea. So the idea is what if the troubled debt restructuring, you can see here, occurs when the creditors for the economic or legal reasons related to the debtor's financial difficulties grants a concession to the debtor that it would not otherwise consider. Now guys, for the trouble debt restructuring, so there are overall two cases. Case number one is what, it's a settlement of the debt in full. Like maybe here the debtor is going to settle the debt in full, either through the transfer of asset or through the transfer of equity. Okay, and there is a second, also there is another way for the troubled debt restructuring, that is called continuation of the debt. Like here, maybe the debtor is going to continue with the debt, but debtor is requesting the creditors to modify the terms for the loan. So guys, here we have overall three cases. Like if you want to settle the debt in full, this is the first scenario, and the debtor is going to transfer the asset, or debtor is going to transfer the equity through the settlement. Okay, to settle the debt. Okay, so this is also called debt extinguishment if you're going to settle in full. Okay guys, so here we go guys. So we will go case by case. So first I'm going to start with this case. For example, if we are going to settle the debt through the transfer of asset. Okay guys, and how the debtors and the creditors will record gain or losses. So here we go guys. So scenario number one, it's a first scenario. It's a settlement in full with the transfer of asset. Okay, so like here we are going to settle the debt in full, and we are going to transfer the asset in the settlement. Okay guys, so here we have here, first of all, what debtors will do. So we are going to talk about in the debtors books first. Okay guys, so here guys, because debtor is going to transfer the asset, so there could be two types of gain or loss. The first is what, the debtor will recognize a gain on restructuring. Okay, and the second is what, the debtor will also record the gain or loss on disposition of the asset, because debtor is going to transfer the asset. So it means debtor has to remove the asset from the balance sheet. So either when he want to remove, of course, either it will result gain or loss. And second, we have here gain on restructuring. Please keep these 2 points separately. Okay guys, so I'm going to explain here how you will calculate first gain or loss on disposition of the asset. This is what we are going to talk about, gain or loss on disposal of the asset. I mean, say I'm going to explain first this point. So guys, here simple rule is very simple. It is normal procedures when you derecognize the asset and you calculate the gain or loss. And how you will calculate guys, so simply first of all you need fair value of asset transferred. So from there you will subtract net book value of asset transferred. Okay, of course, if fair value is more than net book value, this is called your gain. If fair value is less than net book value, this is called your loss on disposition. Okay, this is the first we have learned. Second word guys, we have here second thing, which is called gain or gain on restructuring, because debtors for sure he will have a gain on restructuring guys. Debtor will not have a loss, otherwise there is no need to settle in full. Okay guys, so how you will calculate the gain on restructuring, it is always the difference of carrying amount of payables, because in the debtors books we have booked this debt as a liability. So simply we need a carrying amount of the liability which is showing in the debtors books. From there you will subtract fair value of asset transferred, fair value of asset transferred, not the carrying value. Okay guys, so this will be the gain on restructuring. Now guys, if you will look at here, so we have overall two types of gain or loss. So if this is what we have, another equation, if you want to calculate the total loss or the gain for the debtor, okay, total loss or gain, so it has two types of gain or losses. The first is what we have, a gain or loss on disposition of asset, which you have calculated here by following this equation. And second, we have a plus minus, we have a gain not loss, gain on restructuring, which we will use this equation to calculate. Okay, so this total gain or loss for the debtor guys, it should be equal, like the here, as I told you, we have calculated total gain or loss for the debtor. This should be equal to what, total of what, total gain or loss of this equation. Like if simply you will take carrying amount of asset given minus carrying amount of the debt. Okay, if you will take the difference of this carrying amount of asset given and carrying amount of the debt guys, it will be equal to this gain or loss on disposition plus minus gain on restructuring. Okay guys, so now here I will practice through the question, don't you worry, I'm just explaining equation first. So here we have a question guys. For example, we have here debtor gave a mortgage on building to creditor. So the principal amount of creditor's mortgage receivable, this is the amount of receivable, is what, 5 million. This is from a creditor's point of view, because in creditors books they have booked this as a receivable. Okay, and it has credited the related allowances for uncollectible account. For example, we have a allowance for credit losses also, 200,000. You know guys, in the creditors books, I mean to say, the person who has given the loan, what he will do, he will book the receivables at amortized cost basis minus what, allowances for uncollectibles, which is also called allowances for credit losses. So this is what is called your net realizable value of receivables, but it is in the creditors book. So I'm going to talk about from debtor point of view first. Okay guys, here we have here, thus the carrying amount of receivable is 4.8 million. How we got this 4.8 million? Because total receivable was 5 million. Minus there is a allowance for uncollectible or allowance for credit losses is 200,000. So total net carrying value is 4.8 million. Assume, okay, that the carrying amount of the debtor's mortgage means a debtor's liability, like how with how much value we have booked the liability. Okay guys, the carrying amount of the debtor's mortgage is, assume it is how much, 5 million. Okay, like in the debtor's books we have booked the liability with the 5 million, and the building fair value is 4.5 million, because this building we are going to transfer in full settlement of the debt. And the carrying amount of the building now in the balance sheet is how much, it is 6 million. Debtors transfer the building to creditors in full settlement of the debt. Now the guy's point is that how you will pass the entry. First of all, in the debtors book, what entry you will pass guys? So you have to first remove the liability from your books, because you are going to settle in full. So for that you will debit the mortgage payable with the carrying amount, and carrying amount is 5 million. It's given here, right? Mortgage values 5 million. Okay, and then guys, you have to credit the building, okay, with the carrying amount, because you are going to transfer this building to the creditors. So you need to remove this building, and the carrying amount was 6 million. It is given here, you can look at here, it's given here. Okay, and then guys, if you will look at here, so you have here first on the debit side you have a loss on disposition. And how you got this loss guys? The loss on disposition of building, it's simply the difference of fair value, which is 4.5 million, and the carrying value, which is 6 million. Okay, it means fair value is less than carrying value. I told you guys, if you will take fair value minus what, carrying value, this will be a gain or loss. If answer is positive, this will be a gain. If it is negative, this will be a loss. Okay, so here fair value is how much? We have a 4.5 million, and carrying value we have here 6 million, and you can see the amount is negative. Okay, so it means 1.5 million we have a loss. So this is what we will debit the loss on disposition of building. Okay guys, and now guys, you have to credit the gain on restructuring. And gain on restructuring, how you will calculate, guys, it is the difference of debt settled. If you remember, I told you, if you want to take the difference of debt settled and fair value of the building, because in your books your liability, in your books your liability, I mean, so your debt is showing at 5 million. Okay, guys, and you will subtract from their fair value of asset given, fair value of asset given, which is how much, which is 4.5 million. So we have here 4.5 million. If you will take the difference, guys, so we have a $500,000, because our liability value was more, but we have transferred the asset with less fair value. That is why this is called gain on restructuring. And guys, debtors for sure, definitely he will have gain on restructuring. So this is what we have credited the gain here. Okay, this is what is the entry. Now, guys, if you want to calculate the net, I mean, say net position of the debtor, guys, so you can look at here in the debtor's books. In the debtor books, we have a loss on disposition of 1.5 million. Okay, and we have a gain on restructuring is 5 million. It means you have a net loss. Net loss, how much? 1 million. And how it is calculated, as I told you guys here, if you want to calculate net loss, so this equation I have already told you. Net loss, I told you here, guys, if you remember, I told you if you want to calculate total loss for the debtor, it is gain or loss on disposition, which is 1.5 million loss. Okay, and we have a gain here. Gain is how much on the restructuring? We have a 500,000. So net loss is going to be how much? 1 million. Okay, guys, and I told you this 1 million loss, it should be equal to this equation also, which is carrying amount of the asset given. You know, carrying amount of the asset given is 6 million minus carrying amount of the debt, which is how much? 5 million in the debtors books. Again, it is equal to 1 million. Okay, guys, so this is also your total loss. It should be equal. This is how you will do the entry for debtors. Okay, now, guys, I'm going to talk about from creditors point of view. Of course, if debtor is in the gain on restructuring, if the debtor is in the gain of a gain on the restructuring, of course creditor will have a loss. And how you will calculate, guys, loss? This loss is always equal to difference between fair value of asset received, because creditor is going to receive the asset in full settlement of the debt. So you need fair value of asset received, and you will compare it with the carrying amount of the receivables, because you have booked the receivables in your books. In the creditor books, the loan which you have given to the debtors, it's showing as a receivables. Okay, and the difference of fair value of asset received and the carrying amount of receivable is the loss to the creditors. And how you will calculate, guys, loss? So here I'm using word first, current loss of creditors. Current loss, how you will calculate, guys? You need carrying amount of receivables, which is equal to amortized cost basis less what? Allowances for credit losses. This is what is called carrying amount of receivables minus what? Fair value of asset received. Okay, this will give you a current loss. Now, guys, here you should remember it's a current loss I'm using word. But if you want to calculate the total loss of the creditors, total loss, guys, so how you will do? You need current loss, which you will calculate this way. Okay, I told you here this way, plus what? Credit loss expense previously recognized. Actually, it is simply allowances for uncollectible accounts which you have recorded previously. If you will add that loss with the current loss, this will give you total loss of the creditors. Now let's have a look with the help of example. Guys, here we have a same example. Again, we have a debtors gave a mortgage on its building to creditors. Principal amount of the creditor's mortgage receivable is 5 million. This is principal amount, and it has credited the related allowance for uncollectible account is how much? 200,000. It means in the creditor's books, I'm doing here. In the creditor's books, he has booked the receivables with 5 million minus what? Allowances for credit losses, which is $200,000. It means carrying amount is how much, guys? It is 4.8 million. Okay, right, guys? It is 4.8 million. Okay, the carrying amount of receivable is 4.8 million, which is given by the way here. Assume, okay, that the carrying amount of debtor's mortgage is 500,000. The building's fair value is 4.5 million. This is what we need, because you want to calculate the creditor loss. So which will be the simply the difference of what? Carrying value of, if I will just tell you here, The carrying value of current loss, I'm going to calculate first, guys. Current loss. Carrying amount of receivable, which is 4.8 million, which is the difference of receivable minus allowances for credit losses. Okay, guys. Minus what? Because the receivable was, guys, 5 million. Okay, and allowances for credit losses was $200,000. So the carrying amount is 4.8 million minus fair value of asset received, which is 4.5 million. It is given in the question. You can just check from the question. Fair value of asset received, which is 4.5 million. Here it is given. Okay, guys. So it means we have here current loss of how much? Current loss we have here $300,000. This three current loss means it is called loss on restructuring, actually. Loss on restructuring. Okay. Now, guys, if you want to calculate the total loss, how you will calculate, guys? Here you can see the creditor's total loss. You need a current loss, which is $300,000 plus credit loss expense previously recognized, and previously he has already booked, creditor has already booked allowances for uncollectible of 200,000. It means total loss is going to be 500,000, and this total loss should be equal to the gain on restructuring. Okay, gain on restructuring for the debtor. And you can look at here, this is the creditor total loss 500,000, and it will be equal to the debtors gain on restructuring. Debtors gain on restructuring, if I can show you the entry for the debtors books. In the debtors books, we have booked the gain on restructuring. How much, guys? 500,000, and it is equal to the creditors total loss. Okay, it is equal to the creditors total loss, which is 500,000. Now the point is that, guys, what entry we will pass as a creditors. So, guys, here first of all you have to debit the building, because creditor is receiving the building with the fair value. Okay, with the fair value we have here 4.5 million is the fair value. It is given here in the question. Okay, then you have to credit the mortgage receivables principal amount, because in your books you have a receivable minus allowances. So you will credit the mortgage receivables, and to remove the allowances, because normally allowances for credit loss is credit, so you will debit it now, allowances for credit losses. Okay, and guys, and you have to book it here, loss on receivables. The difference means it's a loss on restructuring, which is 300,000. I mean, say it is a current loss we have just calculated above. Okay, guys, and if you want to see the total loss for the creditors, the total loss is what? This is the current loss plus credit losses expense previously recognized. So total is 500,000, and it should be equal to the gain on restructuring for the debtors. Okay, now, guys, here I have a one note. Sometime, what will happen, maybe the creditors will receive the asset, but the creditors will sell that asset. So in that scenario, so what creditors will do? Creditors should debit the building with the amount of fair value less cost to sell. Less cost to sell. Like here, instead of only fair value, we will subtract the cost to sell also, if you will incur the cost to sell that asset. Okay, guys, so this note is written here. What is note? I told you, if creditor receives long-lived asset to be sold in the full satisfaction, the assets are recorded at fair value minus cost to sell. I hope, guys, it is clear. Now, guys, I'm going to talk about another example. Just have a look another example. Then I will talk about how to settle the debt in full through the transfer of equity. Okay. Now, guys, here we have here facts. We have each company is indebted to Apex. Actually, H is the borrower here, and Apex is the lender. Under $500,000, this is the amount. 12% is the rate of interest. 3 years notes dated 31st December year one. Because of H financial difficulties developing in year three, Hull owed accrued interest. Now it's included a accrued interest, the interest which is not yet paid by borrower, which is 60,000 on December 31st, year three. This is the accrued interest you have. You have principal amount of 500,000, and you have accrued interest of 60,000. Okay. Under the trouble debt restructuring on December 31st, year three, Apex, I mean to say lender, agreed to settle the note and accrued interest for the tract of the land having fair value of 4.5 million. This is the settlement. Okay, we are going to settle the debt through the transfer of land asset, I mean to say, and land fair value is 4.5 million, and the H acquisition cost of the land, I would say it's a carrying value of the land. It is how much? $360,000. Okay, guys. Now here we have a question. Calculate the gain recognized by H on the trouble debt restructuring. First, we want to calculate the gain. You know, in the debtors books, as I told you, we have a two types of gain: gain on restructuring, gain or loss, gain on restructuring, and we have a gain or loss on disposition. Two types. Okay, if you will net of these two gain, it will give you total gain. Then you have to prepare the journal entry to record the transaction on borrower's books, debtor's books. Then you have to prepare the journal entry to record the transaction in the apex books, means in the lender's books, in the creditor books. Now, guys, here we have a solution. Please, guys, first don't forget the data. Don't forget the data. So here we have a data. It's really important, huh? So in the debtor's books, first of all, in the debtor's books, you have booked the liability with how much? $500,000, plus you have accrued interest. I'm talking about in the debtors books, huh? Accrued interest of $60,000. It means your total liability is showing at $560,000. Okay, guys, don't forget this information in the debtors books I'm talking about. So, guys, here, as I told you, we have a total liability of 560,000, which includes principal amount and accrued interest of 60,000. Now, guys, I want to calculate first the gain on disposition of the asset. Gain on disposition of the asset. If you want to calculate the gain on disposal, on disposition, simply you need a fair value of land. Fair value of land is 4.5 mil, 450,000. It is given, minus carrying value, I mean say acquisition cost, which is 360,000. So you can see here fair value is greater than carrying value, so it is called a gain on sale of land or gain on disposal. Now, guys, we have to calculate gain, because debtor will always have a gain on restructuring. Now you have to calculate gain on restructuring. For that, what I need to do, guys, I need a carrying value of debt, carrying value of liability, and carrying value of liability, just I already told you, it includes principal amount plus accrued interest. So total carrying value of debt is 560,000. And from there, I will subtract fair value of asset transferred. And the fair value of asset transferred is how much? 450,000. So you can see here carrying value is more, but you are transferring the asset with less value. So this is called gain on restructuring. If you want to calculate total gain is how much, guys? Now total. So you will take gain on disposal and you will take what? The gain on restructuring. So we will have total 200,000 gain, total gain. And this total gain, you have a shortcut. If you want to calculate directly in total, you can calculate this way also. Simply, guys, simply, if you want to calculate in shortcut total gain directly, so what we can do, simply I will take carrying value of debt forgiven, I mean say carrying value of liability, which was 560,000, and this 560,000 include 500,000 for principal amount plus 60,000 for accrued interest. So this is the carrying amount of liability, and you will compare with the carrying amount of the asset transfer. And carrying amount of asset transferred, I mean say land, it was 360. So you can look at here, this is 200,000 total if you want to calculate total. Okay, guys. Now, guys, this is what the first requirement. Now I'm going to tell you the entry. What entry you will pass in the debtors books. First, we are going to talk about in the books of debtors. So debtors will debit the note payable because he want to remove the liability with the principal amount. He will debit the accrued interest. I mean, it's interest payable also, because it is also going to be settled now, 60,000. Now he will credit the land with the carrying value, which is 360,000. And he will credit the gain on disposal, 90,000, just we calculated above. And he will also credit the gain on restructuring, 110,000. This I have already calculated. Just this is his total gain. Okay, total gain, which will include gain on disposal and gain on restructuring. Now, guys, let's talk about from the creditor's point of view, because creditors, of course, he will have a loss. Okay, and here creditors, what he will do, the creditors in the books of apex. Now, guys, he will debit the land with the fair value because he's receiving asset 450,000. He will credit the note receivables with the face value, which was 500,000, because in his books he also booked interest receivable also 60. So you need to remove that one with the 60,000. So you will credit it. Now you can look at here, there is a difference on the debit side, and this difference we will say it is your allowances for credit losses, or it is loss on restructuring, which is 110,000. Okay, guys, this is a loss, you can say, okay, on the restructuring to the creditors. Now, guys, you should here we are going to discuss another case. It is what it is, quite simple than the transfer of asset. Now we are going to settle the debt in full with the transfer of equity. Of course, guys, here as a debtor, you are going to transfer the common stocks maybe to the lenders, okay, to settle the debt in full. And here you will have only one gain, only one gain. Debtors will have only one gain. Which gain? That is called gain on restructuring. And you know, I told you how to calculate the gain on restructuring. It will have, you will take carrying amount of the payables, I mean to say the amount of liability which is showing in your balance sheet. From there you will minus fair value of equity transferred. Okay, so you will get a gain on restructuring. You will not have here loss or gain or loss on disposal, no, because it's not a disposal. So just there is a simple one gain, gain on restructuring. Okay, guys. And in the creditor books, in the creditor books, how you will calculate the loss? It's quite simple. You want to calculate the loss, it will be simply the difference of what? Difference between the fair value of equity security received, like you will take fair value of equity security received, and the net carrying amount of the receivables. Okay, like you can put it here simple this way: carrying amount of receivable minus fair value of asset, not asset, I would say equity received. Okay, equity received. So this will be what? A loss to the, loss to the creditors. Okay, loss to the creditors. Of course, because fair value of asset received will be greater than the, sorry, carrying value of asset, carrying value of receivable will be greater than the fair value of equity received. Equity received. Okay, guys. So here, guys, we have a same question, and I'm going to do for both, and for the both debtor and creditor double entry. Guys, here we have here again same example. I'm continuing. For example, debtor gave a mortgage on building to creditors. The principal amount of the creditor's mortgage receivable, this is the principal amount of receivable, is 505 million. Okay, and it has allowances for uncollectible amount is 200,000. It means carrying amount of receivables in the books of creditor, okay, it is 4.8 million. It is given here. Assume the carrying amount of debtor's mortgage is 5 million. This is the carrying amount of the liability in the debtor's books, in the debtor's books. Okay, in the debtor books. Assume the creditor receives debtor common stock. Okay, now we are going to settle through the equity. And how many creditor has received the stocks? 1000 shares. Par value is $10, but transaction should be measured at fair value. Okay, and with the fair value of 4.8 million, and here he told you fair value of all stocks, okay, which he has received. Because the fair value received is 4.8 million, it's exactly equal to the carrying amount. It's exactly equal to the carrying amount of the receivables, of the receivable, because the receivable amount was 5 million and allowances for credit losses was 200,000. So it means carrying amount of receivable is also in the creditors books. It is also 4.8 million, which is equal to the fair value of asset received. It means there is a no current loss. There is no current loss, but there is a loss, but not a current. Okay. So creditor recognize no current loss because there is no current loss. How? Let's have a look now, guys. First in the books of creditors, what we will do? We will debit what? Investment, because you are receiving stocks now. Stocks. So it is your investment. Okay. In the common stock of debtor with the fair value. Okay. You will debit with the fair value, and you will credit the mortgage receivable with the principal amount, because the receivable you want to eliminate. And guys, there is a allowance balance also in the books of creditors. Creditors. Okay. So that allowance normally is credited. Now you want to remove it. So you will debit the allowance for credit loss. And here actually this is the only, we have a loss which is equal to the credit loss expense, I mean to say bad debts expense for uncollectible account, which we have already recorded. Okay, previously recognized. Okay, so this is only that, we don't have any current loss here. Okay, guys, I hope it is clear, right? Then here, guys, we have here debtors entry. What we will do, the entry in the books of debtor. Guys, we will debit the mortgage payable first with the principal amount 5 million, because in the debtor books it's a liability. Okay, and we will credit, these two accounts are relevant to the common stock. We will credit the common stock first with the par value. I hope you have the idea about equity, guys. So because we have to record the common stock always with the par value. How many stocks we have issued? 100,000 times $10, the par value it's given in the question. It will be common stock, and the difference between fair value of the stock and the par value we will record under the additional paid in capital account. Okay, which is 3.8 million. And of course, guys, you will have a gain on restructuring, which is equal to debt settled Debt settled, okay, minus fair value of stock. Debt settled was 5 million because it was the amount of liability in the debtors books, and fair value of stock which you have transferred, it is 4.8 million. So this is your gain on restructuring. Okay guys, and again here, debtors gain on restructuring, it should be equal to the creditor's loss, and creditor loss is also 200,000. Okay guys, I hope it is clear. Thank you so much. In the next video I will talk about how to restructure the debt by modification in the terms. Thank you so much guys. Bye bye.